So for anybody who just joined us, I do have a couple minutes. I'm going to show you guys a couple charts really quickly. And this is going to seem really simple, and that's because it really is. I have to give you the abbreviated version. As everybody's aware, this isn't a classroom per se. This is the live trading lounge, so we don't have a whole lot of time for that. I have the benefit of meeting a professional trader in Chicago that's shown a lot of his tricks. We are trading off of a 2-minute candle. We're looking for very tight sideways consolidation of an hour or more. Usually when we get that and the stock breaks out with corresponding really good volume, the stock almost always goes in that direction. What we're looking for is we're looking to be patient until we see the formation of a trend line. And a lot of people that would get out right there. That's what an amateur does. What we're trying to learn to do here is be patient, trade less, make the trades we make bigger wins. What we do is we make our risks so low when we buy here that if it reverses, we don't freak out and panic. We are looking for the formation of a trend line. As you can see here, when this trend line breaks down, you would exit the trade on this breakdown. There's a lot of people who would just panic and freak out and get out right there. I have to go back live before I show you the next chart, because my first priority is for me to make money. Okay, so this is going to consolidate, and if she pops, then we'll look at it. But again, going long, a day when the market is so nasty, perhaps not the greatest idea. Next chart. Just showing you a couple that are really good examples. This is the short trade I did a while ago. So here's the whole chart. The stock was down for the day. We don't touch it anywhere in here. I'm sure everybody else in the world shorted it here and covered here, but that's not how we roll. We're looking for extremely tight sideways consolidation. It does not get any tighter than that. Now, if this looks like a very simple trade to make, then please, by all means, everybody, find me 10 charts in 1 week that look like this, and I will pay you for it. So the stock goes sideways. We have a breakdown here on really good volume. We do not panic and cover our trade here or here. We're looking for the stock to go more or less twice the distance from the breakdown point. And then we are looking for the formation of a trend line. For those that don't know what a trend line is, it's when the stock tries to reverse its direction, but fails and goes lower. And the opposite of that for a while. So, the stock went down, sideways for a couple minutes, dropped again, made a pretty weak attempt to come back here, failed again and went down. So this is a pull-up. So we draw our trend line breakdown area to our pull-up. You get 2 of those, you have a trend line. This is pretty obvious. Again, you can't see from the open here. If I cut the chart off and I remove the safest, but this stock open down here. So when the stock's all volatile like this, we don't touch it. What are we waiting for? We're waiting for this. We're waiting for tight sideways consolidation. This is not perfect, but it was a decent setup. It's the trade me and Brad made together just before Christmas. Stock breaks out, we buy it here. Usually, in a few minutes, you just look at the chart and observe a trend line. Pardon my drawing, that line is obviously not straight. I'd like to lie to everybody right now and tell you that I got up here, but that wouldn't be true. I bought this stock here, and I got out of the trade right here. Why didn't I get out here? Well, I didn't get out here because the trend line had maybe it's going to go higher. And this candle came down, I still didn't get out because this trend line had not been broken. I thought the stock was going here, I thought maybe it was going to continue higher, but it didn't. We exit trades only when the trend line is broken. So, last example I'll show you. It's also a trade Brad made shortly before Christmas. Fantastic example, almost perfect. Stock is up for the day. Worried about it here because it's all over the map. We're looking for tight sideways consolidation and a breakout. The stop loss becomes where the breakout candle opened just underneath 2180. The stock came down to it, but it did not close below that. We do not cover a bad trade, and we do not consider it a bad trade to be covered for a loss unless a candle closes below the open. So once again, After this minor pullback, we get an upward trend. So we take more profit out of less trade. That's what we're trying to do.
Brian, Steve's got his hand up. I'm just going to unmute his mic for you.
Sure.
Hey, Brian.
Yes, sir.
You showed that one chart where you were drawing the trend line up, and you said you didn't get out of it. I couldn't see the symbol of that chart. I was wondering if you could go back to that one.
This is RAX.
Okay, that's all I needed. Thank you.
No problem.